Welcome back to another episode of 5 Minute DD. If you are new here, this is where I jump in and do some due diligence on a stock. I give you kind of the starter level information that I would want to know before I was to purchase a stock. I am not a financial advisor. This is not financial advice. You guys should always go and do more research on these companies if you are intending to purchase their stock. But we're talking about ticker LEG. This is Leg and Platt. This is a manufacturing company that they manufacture things for home and auto. I didn't dive too far into what they do, just their financials, but that's basically their manufacturing company, which is important to know because you want to know what sector they're in. They are traded on the New York Stock Exchange, and they currently have a dividend yield of 5.5%. Now, this is pretty phenomenal considering the next portion of the pros is that this is a dividend aristocrat and has been paying out dividends since 1989. Over here, we are looking at their dividend history. Now, this website, NASDAQ, is a little bit spotty, but what you can tell from this is that they've been increasing their dividend. An aristocrat is a dividend payer that's paid out for 25 consecutive years, and I believe they have to increase their dividend year over year. So when we get to years like 2019, 2020, they didn't increase their dividend. Well, technically they did here early in 2019 and 2020. It just depends. Sometimes they increase it by less than a cent, and so it wouldn't show up on these kind of documents. They may even have paid out 40 cents, 0.4, and then paid out 40.8 the next year. So, or the next payment. So that's why this may not be that accurate. But tracing all the way back, we can see that they paid out dividends for a long time, and they have been growing it for quite a while. Another issue with NASDAQ is early on, this is where it gets spotty, where they show a dividend cut in 1998, which could have just been a either stock split, vice versa, reverse split, anything like that can affect the dividend, and they don't show it on here. So they have been paying out consecutive dividends for a very long time, which I really, really like about this stock. I don't think this stock is nearly as popular as it should be. A lot of people are hunting for like those 7 and 8% yields. Well, Leg is a stock that will consistently pay out 5.5%, and it's a lot safer than some of those higher yielding ones. And I love high yielding dividend stocks. You guys know that if you've been on the channel for a little bit. But overall, a very interesting stock, and this is kind of, I'm going to put this in the 5-minute DD category, but it's going to be like a special because I'm doing the Dividend Aristocrat series where I have about 5 or 6 Dividend Aristocrats that are now yielding high enough to where I'm interested in buying them. So that will be, maybe I'll do a mini series, but we'll see. Now, continuing on, price appreciation wise, looking at their chart, last 6 months have been rough. They're down about 3.4%. At lows, they were about $30, but have since bounced back about 7%. Another 1-year chart, we are definitely in lows with this market. Leg and Platt, even though their dividend is phenomenal, they are not immune to market fluctuations. As we can see, they don't spike a ton. Like we can see, they've dropped 14% since January, which is how the market has been going. But I do think overall it's a much safer investment than a lot of these other dividend stocks. Of course, in the same time period, a lot of dividend stocks have been destroyed recently. ABR, MPW, a lot of those ones have been hurt. So all in all, we look at their max chart, which is always important with the dividend stock. They are up 2,160% all time. Now, they have fallen from their lows, their recent lows of about 50. So they have been beaten down since that 2021 post-pandemic run when the market, they've dropped about 40%, that is ugly. I'm not going to lie about that, but it also gives you a buying opportunity because if you think back all the way from 2015 to about 2018, they were trading in the near 50s. So the pandemic didn't have that much of an impact on this stock. Just the overall market has, meaning that they have a good amount they can run back to. This thing didn't run to the 50s just because of the pandemic. It was in the 50s before then. Now, they are expecting 4.8 to 5.2 billion in sales. That's their target for 2023, which is pretty phenomenal considering their market cap is 4.3 billion. So putting out that much money, that many sales, of course, that's just sales. That's not all overhead. That's not their net profit. That's just their sales target, but that's still impressive for a company of this size when the market cap is 4.4 billion. Zacks ranks this as a B stock, which I don't love using all these different rankings. You never really know who's ranking them or why. They have it ranked as undervalued, which I could see just because the dividend as well as price appreciation potential. But I just thought that was interesting. I tossed that in there. Now, looking at the overview, we can see that this last earnings call was not very good. Their Q1 sales were 1.21 billion, an 8% decrease versus Q1 of 2022. Of course, Q1 of 2022, the market was doing a lot better. The economy was doing a lot better. So that is expected. And that's why sometimes this stock will drop a little bit based off of these news. They have a lot of issues. Raw materials are costing more. Currency impact is decreasing sales. Acquisitions and whatnot, 3% sales. This is their full, but okay, this is the most important part about this. The 2023 guidance down here, unchanged. So even though they had a lower quarter than they were expecting, they're still saying we can make up for it, and we will by the end of the year. Their earning per share went from 150 to 190. That's what they are. Interesting. So that's decent earnings per share, especially when it was down from 66 in Q1 of 2022 to just 39. So they're still expecting quite a bit, a decent amount of revenue and everything, which you love to see. Now let's talk about the cons. First is the recent drop in all of it, everything. Their EPS, the recent drop in sales, the recent drop in just their holdings. It hasn't been the recent drop in stock price. It's been a rough couple of months for this stock, but it's been a rough couple of months for the market more so. Now, the next con is lower growth potential, but I put that in here because it is true. This stock is not going to go 100% in the next 5 years. I don't think it could. Don't quote me on that. Not financial advice. It could, but I don't think it's going to. But this is not the kind of stock that you buy because you want that. I mean, everyone wants that, but this is not the stock that you're going to go, I'm going to put $10,000 in, and if I lose it all, it's okay. No. Leg and Platt is a stock that you'll put $10,000 in, you'll wait 10 years, and you'll have a really good return overall. From the dividend, from price appreciation, most likely, depending on how the market does. But that's why you buy into this stock. So it's not one of those with extremely high growth potential, which we always love, but sometimes you need something that's a safer play. And that's what this series is about. This Dividend Aristocrat series is about safer playing, still higher yielding dividend stocks than what we typically see. None of these stocks are going to have a 2% dividend yield because I can't stand that. It's almost useless in my opinion. But that's just me. I like higher yielding. So the last thing is, if you guys want to see any of this information, I jumped to their investor presentation. I'll link it down below in the description. And they've got everything on here. That I pulled all this from their main website, and they basically just show that they're down. This entire Q1 of 2023 was down with nearly everything. So cash flow as well, it's just the way it's been going in the market. I don't want it to freak anybody out with this stock particularly. I do like this stock a lot, and I will be starting a position pretty soon. I'm thinking about doing a 1K Dividend Aristocrat stock challenge to see how it does compared to our normal dividend challenge. Maybe I'll start that next year. Maybe I'll start it next month. We'll see. Times are tough. Putting another $1,000 into these stocks, I'd love to do it, but it's not easy just coming up with $1,000 out of the blue, especially because I just purchased a house. If you guys are aware, this is a different area. It is a different home. So as always, I appreciate you guys for watching, for hanging out with me for a little bit. I hope you got some value from this video. If you could like it, that helps me a ton. Commenting what you think about Leg and Platt, what stocks you want to see next, what your favorite Dividend Aristocrat is, what you want to see from the channel. I really appreciate that. We're almost to, I think we just passed 450 subscribers, which is phenomenal because I've only been really posting for the last 5-ish months. So I really appreciate you guys coming through, subscribing. It helps me out a ton. And as always, have a good day in the market, and I will see you in the next one.